The Indian market opens higher with the Nifty rallying to around 25,850, led by the auto sector, banks and the broader market, which gains in line with the key indices.
Capital market services provider Grow makes a steady debut on the street. The stock lists at a 17% premium in comparison to its issue price of around 100 rupees. It's flying away as we speak, up more than 20%.
The demerged commercial vehicles business of Tata Motors lists on the bourses at around 340 rupees a share, which is a month after the listing of the passenger vehicle business, in line with brokerage expectations.
And shares of BSE jump in trade after a strong September quarter. The exchange's turnover data remains strong despite a change in the expiry day. Shares of IOL Chemicals surge over 10%, while Parag Mills surges 15% as the street cheers strong second quarter numbers. Office Space Solutions, however, is under pressure after a weak second quarter. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as we speak, Mangalam, it's a pretty good looking screen. We started off gap up 140, 150 points, and we're holding on to those gains. And I think more than the headline index, the breadth of the market is good. Two stocks advancing for one stock that's declining, though the Nifty bank still needs to get its act together. If that can happen, then we'll be on our way closer to around the 26,000 odd mark.
Take that point entirely, Nigel. You know, the way the market has moved higher, and at the same time, we're currently closer to the congestion zone, which was earlier a congestion zone between 25,800 and 25,850. For us to get out of that congestion zone, it is the Nifty bank which will be in focus. A lot of individual stocks. At bottom of your screen, we have advanced enzymes as well. The numbers hit the bourses right away, and the stock is flying up around 6%. But speaking about earnings itself, we have Welspun Enterprises reported an operationally strong quarter, the September business quarter, and we had a 25% uptick in the revenue, with margins expanding as well. Sandeep Garg, the MD of the company, now joins us. Thanks a lot, Mr. Garg, for joining in. It was a decent quarter, no problems about, jump in the revenue as well as margin expansion, etc. What we want to understand is, payments, because across the board, Jal Jeevan Mission payments have been delayed. That's the kind of conversation that we've had with a lot of the managements around. Just wanted to know, what are your receivables from Jal Jeevan Mission and the government at large, and how are those payments panning out?
Good morning, Mangalam. Thanks for taking me onto the show. Straight into the business of UPJJM. Yes, there are challenges in payments currently in the JJM as an overall scheme. It's not only due to us, but it's the complete industry which is facing this. But we believe that this is just a stop time gap arrangement, that the cash flows are a bit slow. We believe that it will resolve over the next few months. At this point in time, as we see, our receivables stand somewhere around 200 to 220 crores from the JJM. Not extremely exposed, but yes, we believe that it'll resolve over the next few months.
All right, receivables due from the water projects around 200 to around 220 crores. Did we get that correct?
That is correct, from the UPJJM project.
From the UP. And overall?
So we don't have any other exposure to the JJM other than the UP.
All right. So you're saying that it should flow in, and I think that's the promise of the UP government as well. I believe the Chief Minister has been meeting various companies and assured them that these payments will get released. So we'll keep an eye out on that front.
And just to add to that, Mr. Garg, I wanted to know, JJM is 200 to 220 crores, but any other government receivables that you have which are overdue?
No. There is practically very little overdue payments from any government, but because we are in the HAM space, there are milestone-related payments, so the payments come in the bulk.
Okay, all right. Let's focus on the revenue guidance then. I think earlier you talked about mid-teens growth. First two quarters, actually, there's a degrowth. Do you think that for the year you can achieve these numbers, or will you want to scale down the revenue growth guidance for the year?
So, in the beginning of the year, I had forecasted that our consolidated revenue should be in the range of 4,000 crores. And the split was supposed to be 40% in the H1 and 60% in the H2. So if you were to look at it, the H1 revenue was expected to be somewhere close to 1,600. We are a shade above it, so we are on track to achieve our guidance of 4,000 crores, subject to obviously the two things, that is the climate and the statutory approvals for the new projects. We believe that we will be able to achieve those numbers.
Right. What about order inflow? You know, the first half of this year, your book is at close to around 15,600 crores. If you could give us a sense of what you are expecting in the next couple of quarters, and what would you end this year with when it comes to total orders won?
So the current order book as 15,600 crores at a consolidated level excludes an order on which we have already emerged L1, which is a 7,300 crore total project cost Pune-Shirur road project. We have declared it earlier. The order is yet not received, so we have we are not considering it. So if we were to consider it, we expect our order book will be in the range of 21,000 to 22,000 crores. My guidance at the year beginning was that we will we'll be booking orders of 8,000 to 10,000 crores this financial year. We believe that it should happen in next few weeks or a month, and that we will achieve that target. Going forward, we still have time, and we believe that we may be able to exceed the target that we had given in the beginning of the year.
Okay, all right. Two numbers I want from you, Mr. Garg. One is on the margins. You know, they were much higher than what we normally see at around 22%. But I think in the past, you've been guiding for around 18%. So you could correct me on that number. What is the margin band we should work with? And the other one is the net working capital days. That's ballooned up because receivable days have moved up. Inventory days as well have moved up. On a steady state basis, where do you see this number stabilizing at, margins and net working capital days?
So currently, what we are seeing as our profit margins and the EBITDA margins, we believe that those could be sustainable. However, as a matter of precaution, we don't guide anything about a particular number because certain things are beyond the control of the business, and these are environmental and governmental issues. So we do not guide beyond that. However, at the current moment, we do believe that these are sustainable numbers for the going forward for the year. The second question that you have asked me about the I forgot that.
Working capital days, sir.
Working capital days. See, as I said, we do operate in HAM, and we do operate in certain areas where your payments come as milestones rather than as a cash flow. So these ballooning up keeps on happening, and then once you hit the milestone, it goes down. So it all depends upon the point in time that the quarter is ending and where are you on the project progress. So these can happen over the few days or a few quarters, but it automatically resolves. And we do believe that the receivables will stay in these ranges slightly lower than what currently is forecasted, but for the year, we will be in the same range.
Just a final question before we let you go. The Welspun Michigan business that you have, order book of close to 2,600 crores. What's the scalability plan here, and what kind of margins does this business enjoy?
So it's a very value-accretive business that we took. The EBITDA margins are in the ranges of 22-23%. We do believe the rationale of taking it was that we wanted to get into the tunneling business. We do believe that the tunneling is going to be the future business, as you must have seen that in last 75 years we did about 2,500 kilometers of tunneling, and we expect in next 10 about 3,000 kilometers. Mumbai itself is doing almost a 1 lakh crores right now, and we expect at least about 2 lakh crores worth of tunnels are in plan.
All that.
We do expect that to grow. We are positioning the company right. We are augmenting the management. We are creating bandwidth to deal with this great opportunity that we see.
All right, Mr. Garg, thank you so much for joining in and giving us a detailed outlook into your business over the next couple of quarters. We wish you good luck. On the other side of this short break, we will focus on the primary markets. Tenneco Clean Air, the issue opens today. Management joins us here in the studio to discuss their plans. Welcome back. You're watching us here on Chartbusters on CNBC-TV18. Let's shift focus to the primary markets now. Tenneco Clean Air's IPO opens for subscription today. Price band for this 3,600 crore IPO or issue is set closer to 380 to 400 rupees a piece. Arvind Chandrasekaran, who's the whole-time director and CEO of the company, joins us in our studios. Thanks a lot, Arvind, for joining in. Congratulations.
Thanks for having me.
Hitting the street for an IPO. But what's interesting is that it's the part of a US global company, which is a private company, and now you're trying to unlock some value in India, right?
Absolutely.
So what I basically wanted to understand is every time there is an MNC-India relationship, the royalty, how much from India goes to the US, and how is that likely to pan out over the very near future?
So first of all, if I may, first of all, you guys are looking dapper, so congrats for that.
Thank you.
That doesn't make a question.
So we're a $17 billion company, right? So we are US-based Tier 1 MNC.
Yeah.
We have 180 plants, 30 countries, serving 100-plus customers, with 40 tech centers. So we're a very fairly large, well-known automotive company. If you want one sentence to describe us, we'd say we're an R&D technology company. We have access to 5,000 patents and 7,500 plus trademarks. So this is when you talked about royalty. Think about the advantage. Me sitting in India with my team, we have access to patents from Tenneco US, Europe, and even Tenneco China that we can bring to India and apply it to the local OEM needs. What do the Indian OEMs want, right? They want technology, and they want it to be affordable, right? So this is what we bring to the table, and the 2.5% royalty is fairly middle of the fairway. If you look at any other MNC, right? You look at the list of MNCs that are in India, 2.5% is sort of middle of the fairway.
You know, good to have you in the studio, Arvind, and interesting business as we've spoken in the past as well. Just a quick question. We've got it at 2.5% odd is what the royalty is. The street would appreciate business, but they'll also be a little bit cautious. Is there a possibility this royalty rate goes up, or is it fixed, say, for the next year, year and a half, 2 years or something?
So look, we have a royalty policy. We have an independent board of directors now that we're going from a private to a public company. So everything has to go through the independent board. Having said that, look, see, royalty is the function of how much help we need from the parent company. So one is the access to technology. The other one is, them coming in and spending their resources, doing the, vehicle validation, homologation, whatever needs to happen, right? So as long as the technologies are staggered, which is what we see in the next 3 to 5 years, we find that BS6 is going to go to BS7. CAFE norms are coming in for CO2. We're going to have TREM 4 going to TREM 5. And these are fairly staggered between 27 and 30. So as long as these legislations on the clean air powertrain side and also on the shock absorber side, if the evolution of the product roadmap of shock absorbers is happening in a staggered way, which is what we are seeing now, and that 2.5% will probably stay.
And a large part of, in fact, the entire IPO is an offer for sale. It is no funds coming into the company. So for the company's own growth, what's the kind of fund that is required, and will your internal accruals be enough for the same?
Okay. Very good question. So first of all, we're a zero-debt company. Okay, apart from the excellent financials we have, we're a zero-debt company. The cash generation is pretty high. We're generating enough cash to fund our capex and our working capital as well. So I think we're very comfortable. The OFS basically is a ticket to enter into capital markets. It gives us the optionality, if we want, to enter into capital markets if we want to grow organically faster or through inorganic means. Plus, it gives the brand visibility for Tenneco. Tenneco is funny because our brands like Monroe Suspension and Champion Spark Plugs are even better known than the Tenneco name itself. So it gives us brand visibility. It gives us access to talent. So think of it as a ticket into the door for explosive growth.
And a ticket which is fairly profitable for the US partners because, $17 billion revenue, you account for just about 5% of their overall revenue.
Absolutely.
But in terms of valuation, given the sort of Indian multiples that we get, it would obviously be fairly value accretive for the American business as well.
India, we are all sitting on this India rocket ship, right? India Inc. is a fantastic story, and Tenneco is, of course, on top of it. And even for Tenneco, right? Tenneco, the company, the parent, India is one of the fastest growing mega regions and also one of the most profitable regions. So obviously all of that money is coming in, the interest coming in. Our CEO, Jim Voss, spends a lot of his time in India as well, trying to make sure that we are set up. So we have a good platform, as you've seen from our financials, right? 18.6% EBITDA, PAT of 12.6%, ROC of 57%.
Right. Yeah.
That is an amazing number. So we have that platform. to exploit the tailwinds going on
The
in the
parent
future.
would have said, we've set up a good business, we like the return ratios, let's take some money off the table. That seems to be at play. But let's understand more about business. You have two verticals, if I look at it, clean air and powertrain, and the other one is the advanced ride technologies. And I'm seeing the advanced ride technologies, suddenly occupying a larger chunk of the total revenues. It's currently at around 42 and 58%, or thereabouts. How do you see this revenue split moving going ahead? And between the two, which one is more profitable?
So right now, again, we have a very long sales cycle. So we are in a business where just to get a new technology validated and homologated takes 2.5, 3 years. So you have to really zoom out or take a 5-year window. So the next 5 years, we don't think that ratio is going to change much because
50% a piece, approximately.
Sort of. We're not seeing that much change. I think what is interesting is that the premiumization of shock absorber technology is happening at a very accelerated rate. On the legislation side, which is our clean air powertrain business, that is happening like a heartbeat, right? So every time there's an emissions legislation, we get a bump in content, and then so it goes like that. But the shock absorber disruption that's happening is going to be very rapid depending on the adoption rate.
So suffice to say that currently the clean air business is slightly more margin accretive, but shock absorber, because of premiumization, would get closer to that.
Again, look, we have passenger vehicles, we have commercial trucks, we have off-highway industrial. So so I can't give you a weighted average answer, but yeah, you could say that slightly more on the CAPT side and a little bit less on the ride technology.
And your revenue mix across passenger vehicles, commercial vehicles and all of that will stay the same? 2/3 passenger vehicle, a quarter commercial vehicle and the others?
Again, because of long sales cycles, for now, yes, that ratio will.
And very quickly, before we let you go, what's the utilization levels you're functioning at? Last year, you did ballpark 5,000 crores. So what would that mean in terms of utilization levels?
So we are at a very high capacity utilization, 80% plus, and that's because, again, that's another differentiator beyond the R&D and technology side. We have a very unique method of product and process design that includes standardization and modularization that allows us to run a lot of these standard parts at very high capacity utilization. So I think if we keep that gross block as is, we probably get another 10-12% top line.
Appreciate you coming down, Arvind. Wishing you and the team all the very best. On listing, we'll push you a little bit more for some quantitative numbers, but it's a great business. Taking some money off the table, the parent's a lucky person, I think so. Yeah.
Thank you.
Thanks.
You guys looking dapper.
All right. Look forward to chatting up with you again. Take that break, come back. We continue our focus on markets. Don't go anywhere. Welcome back. Markets holding with solid gains as we speak, but the demerged commercial vehicles business of Tata Motors listed on the bourses at around 340 rupees a share. The listing comes a month after listing of the passenger vehicles business, which was in line with what the brokerages were expecting. Rachna spoke to Girish Wah, the MD and CEO at Tata Motors, to understand the outlook for the commercial vehicles entity of Tata Motors. Let's listen in.
Let me give a historic context. I think Tata Motors listed as Tata Engineering and Locomotive Company Limited way back in 1955. Since then, the commercial vehicle business of Tata Motors has been contributing to the country's economy, country's progress, especially in road transportation, infrastructure building. And today marks a very important historic milestone that we are getting listed as a separate entity. Listing as a separate entity gives us now sharper strategic focus, freedom to look at opportunities which are tailor-made for the commercial vehicle business. And looking ahead, we will keep on exploring opportunities which are close to the commercial vehicle and the logistics business. If I may also add, in the past few years, we have driven some strategic shifts in the company which have led to good results in terms of strong margin growth, robust free cash flows, and high return on capital employed, while we also pivoted towards digital and sustainability. Going ahead, profitable growth with all other financial metrics that I mentioned, and looking at the global platform will continue to be our agenda.
So what's your immediate priority?
Immediate priority is, of course, continue to deliver the financial results that we have been doing over the past few quarters and years, I think that's what continues to be the priority.
And your outlook on the industry?
I think post GST rate rationalization, there has been good demand which has been seen on two fronts. Primary demand, mostly in smaller commercial vehicles due to reduction in the prices. And due to increase in consumption, one is also seeing an increase in freight, which will therefore lead to secondary demand, especially for long haul, medium and heavy duty trucks. And therefore, we are quite optimistic about second half of this financial year.
About the regulations, a lot of norms coming in when it comes to emission and also towards electrification. How do you see that?
So decarbonization, circularity will continue to be the most important agenda for us. As far as regulatory roadmap is concerned, there has been a very good close coordination with the government, and whether it is on safety, emissions, CO2, I think there is a close working which is happening, and there is a fair bit of clarity on how the regulatory roadmap will evolve. And as a company, I think we are not only working towards compliance, but actually leading some of the important transitions, especially decarbonization and circularity.
Right, with that, we'll wrap up on this edition of Chartbusters. The news that the market continues to do well. In fact, now very close to the high point of today's trading session, closer to that 25,900 mark.